So I basically wanted to show just kind of like front side versus back side of trades, and just kind of like for anybody that's beginning or anybody that's advanced, this is like a really kind of easy way to figure out whether you should be focusing short side or long side. So I wanted to show. I don't know, David. What do you think? Should I do AMC just because so many people are looking at it, or?
Oh, absolutely.
Okay.
You're probably gonna explain it to some people that are in it, so it's gonna be useful.
All right. Let me just get all these off of here first. Where are we? Okay, so this is, I think I'm on the 60-minute, yeah. So I'm on the 60-minute line chart right here. Line chart's always the best, I find, to draw your levels and draw your trend lines and everything like that. So I know I've said a bunch of times on this show I'm not a huge fan of the horizontal trend lines, but this is when they kind of come in handy. The only reason I say that is because I find
diagonal.
Yeah, diagonal ones. Yeah. The reason I say that is because I find diagonal ones are like really open to interpretation. Like depending where you latch them on, like everybody could be getting different ones. So like that's why I like horizontal lines better. So like I usually, when I'm playing charts, I usually play off the horizontal lines, but I'll use the diagonal lines as kind of like a rough indicator of front side versus back side. So here we are on AMC. This is the line chart here. So basically what you're trying to determine when I say front side versus back side is like the front side of the move is essentially like when everybody's buying the stock, they're pushing it up, like it's strong, everybody's focused on it. And then the back side of the stock is kind of like when everybody's sort of lost attention, it's like broken under its trend line, it's starting to kind of sell off, like shorts are taking over, that sort of thing. So right here, if you look back here on AMC, this is kind of like when the run started to take off. So on this one, it's kind of interesting because there's a couple different ways you can do it, right? And it depends on like what your risk tolerance is and everything. So what I would do is basically draw a trend line here. So essentially you want to find like wherever the run started and then just draw your line up from that point. So like down here is kind of like where the run started. And then like that would be, roughly where I'd be looking at for like the full front side of the move. So like everything up here, I would consider like generally front side, right? If you look back here, like that kind of ties in pretty close with this. Like it's hard to get it exactly on this big of an angle, but you're probably looking at something like that, right? And then you can see like over here when it broke down, you kind of got that little bounce off this line, cut back under. So this is what I would consider like the main front side of the move here, essentially. Like down from $12, we had this big run up. So everything up here is kind of, in layman's terms, this is like a void on the short side for the most part, right? And then once it gets over here where we are now, like this is where you can be comfortable basically shorting every single pop. But in the shorter term, because these things obviously, you don't want to have to wait like 3 weeks to get into these plays. What you can do is you can take shorter front side. So if you go, something like this, maybe where we're here, and draw that up, you can see, if we start here, then we got, touches there, comes way up, touches here again, and then it comes down. So this is kind of backside again, right? So at this point, this is just kind of like a slow sell-off. I think back here at this point now, you can look to sell into pops, right? So if you did want to short it here, this is where the horizontal lines come in handy. So if you got short under here, I'd be looking at, say, these two tops right here, right? These two, you had two tops here, and then it came down at base 2 times on here, and then it sold under. So for me, if I was going to short this, I'd use this horizontal line as my actual level. And then my diagonal is kind of like just my rough determination of front side, back side. And then if you're above, so this line down here, this is our main front side indicator, right? So everything up here overall is still where the longs are in control. So if you are shorting on these types of moves here, whether call them the steeper front side moves or whatever you want to call them, these are the ones that you don't want to be super greedy. Like we're not trying to fade this thing from, $50 all the way back down to 12. These are the ones where you just take it, like line to line, as I say. And what I mean by that is basically, this is our line here. So we broke this. I'd be looking to cover just into the next main bottom, which is this right here, right? So you take that and you cover down. So just line to line, right? That's why I like my horizontals. And they both based, pretty much almost to the penny off that same level. And then we start coming up again, right? So at this point now, this is kind of like another front side to me. So I would basically delete this line, delete all these, and then I would see kind of like where the next move is. So maybe, again, because I'm predominantly a short seller, maybe the next one is, now that's my next front side I'm looking at, right? So at this point, We have this line, and you just do the same thing, right? So we have front side here, and then as soon as it breaks that front side, now I'm looking for horizontal lines to use as my levels. So, I would draw probably right there as we came up, bounced off it here, broke through it. You can see it kind of came up, hit that line, broke through again. So now that we've broken through here and we're backside, it's the same thing, right? You're just going line to line. So you can either short it when it breaks this line, comes right down to this next base again, or, you come right back up on the backside of the move, you short right into this line, cover back down again, and then it just keeps channeling between these two levels, right? So it's
Question.
Yeah.
So can you put the horizontal back, the bottom one? So would you play both, like the short when it first broke the diagonal, or would you play the second one? Because if you could put the top horizontal there as well, because I know a lot of the more cautious traders won't play that first dip. They'll look for the confirmation of the trend break from the diagonal, wait for the price to bounce back to that top horizontal line to see a rejection, and they're like, okay, this thing's for sure dead, and they'll play that second one.
Right. So usually what I would do, I kind of like to double these up. Like, so if I was playing something like this, like what I would do, because this is all, these are 1 hour, this is over the 1 hour time frame. So, this is a day, like this is a day, this is a day. So like, if you're looking from this peak down to this valley, you're looking at like, it looks like 3.5 or so days, right? Including pre-market and stuff. So like the way that I would usually do these sort of things is I would start in really small up here, and then I would look for another, it's just combining more and more. So like I said, we have our major front side move here. So I showed you that first one where we were backside. Now, as we get further along, that line just kind of keeps flattening essentially. So now here's our second front side move. So at this point, like what I'd be looking to do is basically let it come down, because I never chase weakness on the short side because it's way too risky. So I always wait for a bounce. So I wouldn't touch any of this personally. Let it come up. And then I would maybe start small here, or maybe not at all. And then what I'd look to do is, just in like the interim here, like, I would do something like that, where like I'm looking, okay, we have a bottom, we're trending up, we've hit this line. So this is my line of interest. So I'm thinking, okay, 59, 60, that's where I'm thinking it's going to reject. So I would combine that with another smaller, front side trend line right here. And then this little pop right there, that's where I'd get in. So like, you can start in here. I usually don't, just because, for me, like on this particular move, you're looking at getting an extra $1 a share for a potential, like $6, $7 reward. Like to me, that's not really worth it. Because if I put in, 20% of my size up here, and then it just blows through that line and takes off, I'm just taking a loss. Whereas if I get him back here, I can just go full size right away, because I know it's not going to come back up, and I know I got way more upside, right? So that's kind of like what I would do, is I'm just combining like, okay, here's my big backside line up here. Here's the horizontal line I was looking for. So it's bounced up, it's hit that horizontal line. I have another little trend line that's kind of happening, within this little pattern in here. And now we're under this, call it intraday or, multi-day trend line. We're behind this multi-week trend line. We're underneath the line that I thought it was going to reject off. Like, we got 3 things that telling me this thing is a great short. So that's where I get in full size. And like the same goes for long, right? Like long, you just want to be looking for front side of the move. So if this is your line, you could buy it off here and, just sell it up into this next level. And then when it comes back down, you could buy it off here again and sell it up into that next top, right? It's the exact same thing, just line to line. So like for a long example here, this again, like you always want to use horizontal lines. Like these trend lines are never really good to use as actual risk levels, because it can flip through it pretty far, and they're like I said, they're really open to interpretation. So like if you wanted to long this, basically what I'd be looking to do is like say, okay, this is my front side of the move here. So I obviously need this base to draw that line, right? So I've drawn it from here. I need to see this first. So what I would do in this case is I would pull this up to that level and this level here. So I'd let it come up, it tops out here at $63, and then it comes down. Now I'm watching this trend line, right? So now we've based here, we've based again. Once you see that reversal, you're just doing the opposite thing, right? So you go trend line, it's the exact same as the backside line I did on the smaller time frame, right? You do that downtrend line. So if we zoom in on this, it's the exact same thing. So here's my overall front side line. Now here's, this is the downtrend line here. So as we're, we've based off this level, which I'm interested in, and it's come over. So right here, at 54 bucks, you can buy in full size here, and you just ride this thing right up to that next line, right? There's not even really any hiccups in there. It just goes, it's line to line. It's pretty clear cut, and a lot of stocks select this way. So this is basically my whole trading system essentially.
You could catch knives. You know enough.
Nah, I like sorting better. But that's kind of why, when I look at this thing now, it's well, here, let's change the time frame a little bit here from 2020.
Yeah, the diagonals they are tricky. It took me a while to get them. It's more of an art than science. You can't just pick like a bunch of low points and start drawing a diagonal.
Right. So yeah, so basically, at this point, when I look at this particular chart, if I get these out of here, you could argue that if you're coming from down here, that could be true front side. I don't know. It's just open to interpretation, right? At this point, I mean, this is why I don't really like these trend lines as something to actually buy off. I like the horizontal lines because those are a lot more distinctive. So where does
that bottom horizontal where does that bottom diagonal lead to with price? Like if the price is about to fall there, say in a few days.
Right now, this is 22.
Yeah, 22.
Which kind of might make sense because it lines up. If you look over here, if you draw this is really when the move first started. This is when this is the first ramp. So this is where you have the most power, and that very first pullback was right there at 21.95. Right, that was when it just started to really take off. Right, so if you zoom out, I mean they intersect over here. So there's also this base here. So I bet you in the next this week we're probably going to see AMC will come down. I would say probably close to maybe 26 bucks. It might come down to 22, and then it'll bounce again, and we'll see how high it bounces, and we'll see. We'll just kind of basically do the same thing we're doing here. Just keep knocking those trend lines flatter and flatter and flatter, and you can just play both sides of the move all day long. But as soon as this to me is the ultimate trend line right here, this one for sure that we got. So if we get, if we break right below this 20, now it's say 22 bucks roughly, in another week that trend line will be around 24 bucks. Once that breaks, then it's dead. There's no more trades to be made on this thing.